Almost every sector green. Energy's roughly flat. VIX below 20. Let's get to Bob Pisani. Morning, Bob.
Good morning, guys. Happy Monday. 4-1 advancing to declining stocks. Believe it or not, despite all these concerns, we're only less than 2% from an historic high on the S&P. Take a look at the sectors. For the month, it continues to be reopening stocks, but tech's leading today. Great 2% moves up in some of the semiconductors. They're all the leaderboard. Materials, industrials, modest gains. Banks, flattish. Energies, flattish to slightly down. As you can see, slightly up here. That's been in and out. The important thing is not a lot of new highs. Financials, Morgan Stanley, some of the other ones like Citi at new highs. But by and large, it's been about the reopening in May as we get into the last week here. Energy, materials, banks, industrials. There's the reopening sector. Tech has been lagging, although as you see it was up today. It's trying to make a bit of a comeback. The good news, the market believes the Fed has begun that tapering conversation starting last week. And the question, of course, is can they actually get across to the other side, hold the market's hands? Remember, the bears have been saying this is it, peak everything, peak economy, earnings, peak reopening. The bulls are saying the Fed might be able to successfully communicate what their tapering and rate hike moves are throughout the summer. If they can do that, you get to the other side. You don't have a taper tantrum. Maybe. We'll see. It's very early. Big thing is Q2 and Q3 earnings keep going up just like Q4 and Q1 went up. Look at these numbers. They keep going up. For the second quarter, just a few weeks ago, we were up 54% for the second quarter. Remember, the second quarter last year was the bottom, so we're going to have big numbers again for the second quarter. Now it's up 62% in a few weeks. And Q3 is the same thing. It was up 19% in the beginning of April. Now it's up 23%. And the fourth quarter, same thing. They're raising the numbers because the analysts have been embarrassed by how badly they've misunderstood the opening and the reopening theme here. Want to just point out, finally, that the important numbers here that we've been seeing with some of these thematic tech companies, these clean energy, lithium, cloud computing, cybersecurity, Cathy Wood's ARC funds, these are all dramatically off their 52-week highs. We've been noting this for a couple of weeks. I think that something that's been underreported is the fact that the outflows have been very modest in these funds. Most of them have seen 5% or so outflows. So when you have a 30% decline and only 5% outflows, that's pretty modest. And it's a sign that a lot of the holders in these funds may be a little stickier than people had thought. Yes, probably a third of these funds are held by retail people who are very, very weak hands who got out very quickly when the momentum moved against them. But at least half of them, I would say, are longer-term institutional holders. And I think that's a good sign for these companies. And the main reason we're not seeing major outflows. If there were big outflows, then you start seeing panic with these fund holders. I don't see it right now. And I think that's been a source of a lot of encouragement.
Shepard Smith here. Thanks for watching CNBC on YouTube.